To our Sunday market update for today, the 17th of October 2021. It's great to have your company. In a couple of minutes, the team will start working through this market in a very structured way. If you're a trader and you're looking for more information on what lies ahead this week, we're going to give you it from a number of points of view. Early on, we're going to have Julian come in. He's going to talk about macro market overview. And after that, we will have Alexis come in and do the fundamental part for us, followed by Ash doing market data, and Ainslie doing gold, Shukri on crypto, Ainslie back on oil. We'll have currency strength index with Lloyd, Gordon Scott doing stocks for us, and Geoff doing the technical. So whatever type of trader you are, there's information coming in the next 45 minutes to an hour, which will benefit your trading as you look at the market in the week ahead. You can watch it as a block right now and do the whole thing. We can come back later and we'll publish these in small amounts on YouTube, on Facebook, so you can watch them in smaller bite-sized sections, about 5 minutes each for each of the sections. So if you're looking for a deeper understanding of how these markets work and what lies ahead this week, this is the place to be. Make sure you put in your bookmarks. Make sure you come back every week and watch this if you want to get a really good look at how markets are setting up ahead. Julian, I can see you're looking intently at your screen. Are you ready to go? We're going to do macro market updates with Julian McCree to start with.
Hey Paul, and hello everybody. I am looking intently at my screen and trying to rapidly reset a couple of slides that I wanted to show you guys. So look, I thought we'd do something slightly different today, just to keep everything updated. But before we start, right, Paul is going to make a more structured announcement, but I'm going to give you guys a quick heads up. So myself and Ainslie next weekend, in my Trader Cafe session, so that usually runs just before we do this, right, we are going to have a special on the gold and silver market. What we're going to do is something called a deep dive. Now, I know you guys have all heard of that. Okay, what it's going to be is a combination of fundamentals and also technicals. Why are we doing a deep dive? You say to me, Julian, right now I should be in Bitcoin because it's hitting new highs. Gold is looking like a sick puppy. Well, the most important thing about sick puppies is their investment opportunities. So what I'm hoping to show you guys is where the potential is for gold and silver to go over the course of the next 2 to 3 years, right? This isn't a short-term trading position. What we're going to do is we're going to talk about what the opportunities are for this market, for those two markets, really going forward. So it's going to go into quite a bit of detail, a lot of macro stuff, a lot of information. Be my guest to pop into the show and also ask us a heap of questions that hopefully we'll be able to answer. But I just want to give everybody a heads up about that before we crack into what I'm going to talk about today. And look, I think
Julian, I'll ask Mai to publish the links to that into the chat on Zoom and into Facebook and YouTube and Twitter if she can. So, Mai, can you post a link to Trader Cafe next week and to everything? So anyone who wants to join Julian and Ainslie deep dive on gold and silver?
Gold and silver. We're going to try and talk about silver as well too. I think I told Ainslie that. so anyway, I hope she knows. So look, guys, what I want to do today, right? So macro. So from time to time, right, I could talk about macro every single week, and at some point you run out of things to say. Okay, things to say, which is super important. So today is another one of Julian's step back sessions. Okay, so we've had some little mini deep dives into freighting and stuff like that. So now we're going to have another little mini deep dive. We're going to look at something called the sentiment cycle. For those of you who have been to any of my lectures or classes over the years, you will know that I keep rabbiting on about this, and I will bore you to tears with it. So why is the sentiment cycle important? Well, if I can just share my screen here, hopefully I can prove this to you. So hopefully you guys can see this presentation as it's unfolding. I've moved it around. So what I'm going to do is I'm just going to minimize a couple of things here, make this a bit bigger so I can see. Whoops, there we go. So we'll come to that in a second. Obviously with this is a little bit of a financial presentation, so we need to stick a quick disclaimer in there. You guys know all this stuff, right? So basically I'm really sorry, this is educational, and if you do buy anything and it goes wrong, it's sort of really not my fault. So please read this and be conscious and freeze the presentation here as it unfolds, right? So what do we mean by the sentiment cycle? What it really is, essentially, is a plot of the psychotic nature of markets. So markets generally never rest in something economists love to call the equilibrium position. That means that everything is in balance. Well, I've got news for you guys. Nothing is ever in balance in markets, right? Markets go from tremendous enthusiasm all the way through to deep despair, and the journey in between is something called a trend. Okay, the amazing enthusiasm that markets suffer is normally a topping action, and the deep despair is called a bottoming action. You may see technical people talk about cup and handle formations and things like that, and you guys know, if you've been with me for some time, I talk about the aversion point, which is the opportunity to get involved on the buy side when the sentiment is really, really negative and just starting to turn. So look, where are we at the moment? So when I look at some of the markets around the world, and I think you guys, I would encourage everybody to do this. So pull out your daily charts or your weekly charts, try and get a handle for what you're seeing in some of the markets. And it doesn't take a genius to look at the US stock markets and say, well, aren't they quite enthusiastic right now in terms of that cycle, right? So we go back. This is the enthusiasm point. Now, what do I mean by the enthusiasm point? Well, from the photos, it pretty much sums up how I tend to look at it. So pretty much everybody is on board who wants to be on board, and people are incredibly euphoric about the way in which the world works, right? So what happens is the world moves from the fear of losing money to the fear of missing out. So all your mates are trading Bitcoin, all your mates are trading SPACs or trading, options on meme stocks, right? I'm just thinking of some of the examples of the last few years, right? There's been many, many more of them, right? And at the moment, I would think that the energy sector is a really good example of people going to the fear of missing out, right? It's at the enthusiasm stage, but I don't think it's over yet, but I think it's at the enthusiasm stage, not necessarily in oil. Oil's still got a bit further to go, but in some of the derivative products like coal and natural gas, most definitely we're into that zone, right? So what's been going on here is the smart money starts to sell, right? So the smart money that's been in since when oil was $15 or natural gas was $2 or $1.80, now at $5 for natural gas or $6 for natural gas, they're saying, well, do you know what? I've had a great run. I don't need to be here anymore. I'll start to get out. But what they're doing is they're selling into that optimism strength, right? And so there are some areas that you need to look out for. And so how I like to describe it, actually, well, it was really usefully put on a bit of paper in the last few days by a guy called Jared Julian, who runs the Daily Dirt Nap. Go look it up on Twitter. He's quite an active Twittery, I guess we should say, or Twitter. I'm not quite sure what the right thing is. But his definition, I think, is really good. Look, when things are good, like now, we think about the future. We think about spaceships, flying cars. We've seen those recently. We think about EVs. We think about vertical farming and 3D printing and NFTs and Web 3.0. So all sorts of innovations. If you think about people's horizon for their investments, they always think this is a good deal. It's going to be a great deal, and it doesn't matter. Look, in 3 years this is going to be an amazing payoff, right? They're always thinking way into the distance, all right, in terms of their investment horizon. When things are bad, go back to 2008. Those of you that remember 2008 and what the world looked like then, do you remember how everybody's horizons was so much more short term, right? Oh, I don't know. I'm going to lose my job. Therefore, for me, it depends on how much money I have in my bank account right now. And I don't care about flying cars. I'll come back to those another day. Quite frankly, what I'm trying to do is to get through next week, right? So you see how people's horizon preferences move? Now, it doesn't take too much thinking to figure out when the right time to be investing is, right? Because you say, well, hang on a second, with a long-term investment horizon, I do get it. When you get that combined with a few other things going on, what are you seeing, right? You've seen, so what are the other things we've seen recently? The SPAC, the boom and the bust of SPACs in some respects. There's a lot of lawsuits flying around with those at the moment, right? You've seen the rise of the retail trader in the last 18 months and the beginning of that trend to start ending, especially in the States where there's a number of accounts, huge numbers of accounts are being closed at the moment, right? We're going to see the turn in interest rates at some stage. You know, how high that goes, I have my doubts about how high they're going to go. And also there's the energy price move, right? Energy prices are incredibly deflationary, and that will act as a brake on spending at some point in time. That brake on spending will affect stocks at some point in time if energy prices are sustained at these high levels, right? So when we look at the market and we see what's going on, you can see from this chart, right? You know, this is March 2020 on a weekly chart for the S&P going back. Do you know what? That was March 2020, was almost 2 years ago now, guys. It was literally a straight line up. Only recently have we began to see the world start to turn over. I am not calling a top in stocks today, this week, this month. In fact, probably not this year. As we go into the Christmas rally period, right? Why would I call a top in stocks? I'm just giving a few warning signs that what I'm seeing out there have been and is the early signs that you would see in a traditional market topping environment, right? So when you look at the daily charts, look at the last couple of dips we've seen in US stock markets, right? They went down for 2 or 3 days. The market bounced back, rallied new highs, right? I'm not saying we're not going to go to new highs. I'm just saying I don't want to buy the next new high, right? Because you can already see the way this market is rotating a different way. So now we've had 2 waves down, and we're bouncing back now. And the last Thursday, Friday were great for the market. Who knows what's going to come next? But what I'm seeing here is a more active distribution of positions than you've ever seen before, right? So movement of positions. People are starting to get concerned. And if you unpick some of those American sectors, there aren't many of them that are doing that well. Most of them, X of energy, are struggling a little bit, right? So always something to bear in mind, right? So when we think about this, there's other indicators as well too. When you look at the sentiment, you look at the panic, the euphoria versus panic phase, and what that tends to say. And you can see right now we're very clearly in. It's a bit difficult to see on this chart, but freeze the frame and have a look. It's this area up here. Okay, so the black line indicates where we are at the moment, and the grey line indicates the future returns, right? And so as we get up to this point, you're expecting future returns to be quite poor. When you've had the black line down here, you're expecting future returns to be quite positive. So this the current stage of the market, when you analyze it this way, and this is called the Pulse report that comes from Citigroup. Sadly, the guy that wrote it has actually just died in a car accident, but you know, I'm sure that they'll carry on the legacy. But it's an incredibly important report, and I think just over the years you get used to this type of approach. So again, I'm not trying to call anything, right? I'm just saying, guys, take a look around you and see what's happening, right? In your instinct that everybody has, you can see things a little bit abnormal, right? And when you look at the corporations, right, what's been going on the last 12 months? There has been a huge amount of money come into the stock markets, but equally, there's a lot of corporations who have raised money into that market as well too, right? Something like $500 billion, $550 billion has been put into the market in the last 12 months by corporations who are essentially sending money to all those people who are desperate to buy stocks, right? And they're saying, great, I've got loads to go. How much do you want? So when we think about this, right, well, there's a couple of other signals as well too, right? So one of the other signals that you could use in the Russell 3000, right? If you look at the percentage of growth stocks that have 0 or negative earnings, we're sitting at an all-time high. Again, it's not calling the end here. I'm just saying, hello, there may be some warnings. One of the big things, right? I know Ash is really keen on this stuff, right? One of the big things is the net commercial positions that you see in the market. You look at all of the futures exchanges and all of the markets out there where the commercials have positions. Right now, they have significant short positions. Okay, they are not long, they are short. So they are looking for distribution. So, and look, here's some of the key indicators, right? When we talk about that enthusiasm point, how can you see it? Right? So when you tell your friends how much money you're making in the markets, right, you're giving up your day job to go and trade stocks. Okay, that is one of the warning signs. We're not talking about what you guys are doing out there because you're all committed to being a long-term trader. These are the short-term guys who have just jumped into the market right now, bought something without any idea what they're doing, and all of a sudden it goes up. They think they're geniuses. It's amazing how markets can make a lot of people look very clever on the way up, right? You know, when you start counting your money and figuring out how early you're going to retire, or how or how you can go about spending it, or how your wife in some cases could go about spending it, those are sort of some of the indicators that you might want to think about, right? So look, I've got a couple of others that we can sit here and look at. I think for me, I just really wanted to highlight what we're seeing. So there's another stage after this, right? So what tends to happen after this is we go into a couple of technical breakdowns. So have we begun to see those in the stock market? Well, time will tell, but as markets roll over, they take their time. Tops in stock markets always take a long time. Bottoms are always set very quickly. And as we do this, and as we roll over, you will go through various stages of disbelief. Everybody out there will tell you it's just another correction and it's still time to buy. And what happens is you end up adding to your positions, the market keeps falling. So like I said, guys, I have no idea when, where, or how, but my sense is from here on in, we probably shouldn't be buying new highs. We should be thinking about the opposite approach. But I don't know what that time frame is going to look like, and I highly doubt it's going to be this year. It could end up being the beginning of next. And that's it for me, Paul.
Cheers, Julian. Thank you very much. Always fascinating to have a look at sentiment and markets, certainly, as you say, stock markets in particular, at a key moment. And one of those moments, I think, where one of the strange things that happens in trading, when you look back 3 or 4 months from now, whatever happens, I think people go, that was pretty obvious. And I think either way it goes, you've got to make a case that it was quite seeable. So let's keep an eye on it. Let's let it play out. As I say, tops take a little bit longer to play out. So let's let it play out and get this picture really, really